What role do life insurance companies play in your financial life? What role do they play during your years where you're looking to accumulate money, where you're working, where you're producing, and ultimately at the back end of life when we're thinking about income, when we're thinking about distribution of our money, when we're thinking about retirement, things of that nature? Where do life insurance companies play a role to optimize your retirement planning? Hey, what's going on, cash flow hackers? It's Chris with Life 180. In this video, we're going to be talking about life insurance, annuities, how to utilize life insurance, how to fund life insurance properly, and ultimately, what role do life insurance companies play in your financial life? What role do they play during your years where you're looking to accumulate money, where you're working, where you're producing, and ultimately at the back end of life when we're thinking about income, when we're thinking about distribution of our money, when we're thinking about retirement, things of that nature? Where do life insurance companies play a role to optimize your retirement planning? And so what I wanted to do with this video, and you can see back here, I got my board with a couple things written out, just to kind of break it down and make it as simple as possible to understand where properly designed life insurance plays into the equation, where annuities play into the equation. And a lot of people don't realize this, but life insurance companies are the companies that ultimately do life insurance and annuities. They're both insurance products. The risk, what happens with life insurance companies is everything is, how do I put this? Everything is done actuarially based, right? Like, so life insurance companies understand that they need to balance their portfolio out properly. And so the risk to the life insurance company with when you buy life insurance is that you're gonna die too soon. Because if you buy life insurance and you die really quickly, then they're gonna pay you a bunch of money, you've paid less premium, and so there's more risk to them. With annuities, the risk is you live too long, because annuities ultimately are guaranteeing that you're gonna have an income stream for the rest of your life, or for whatever the period of that annuity is based. So the longer you live, the more risk there is to the company. So on the life insurance, the risk is you die too soon. The annuities, the risk is you live too long. And so what they do is they always try to manage and balance out their portfolios. And manage out and kind of balance out their general fund and their overall product balancing on their books. And so that is that. Now, what I want to do is I want to really get into life insurance first, and then I'm going to break down annuities right after that. And so let's first and foremost talk about life insurance as a whole. Now, a lot of people have been told that, hey, buy term, invest a difference. I'm not a big believer in that philosophy, because what I see is a lot of times people will go out and they'll get the 10-year term policy, or maybe get a 15-year term policy, or maybe they get a 20-year term policy because they have a kid, and they go, well, within 20 years, my child is gonna be grown and out on their own, and they're gonna be, out of the house, and my need for insurance is gonna be less. And the reason that doesn't really jive with me is because the idea, the mindset of thinking that I need less, it's driven by a very minimalistic mindset in the context of you really want to be focused on trying to create more. I'm a big believer that it's our responsibility to leave the world better than what we found. And by thinking that you're not going to need life insurance, you're basically telling yourself, and you're putting yourself in a position where you're not trying to build anything significant. Because listen, a lot of people, if you go out and you talk to the most successful people in the world, there are not many multimillionaires out there that utilize the buy term and invest a different strategy. And why is that? It's because it doesn't work, and the benefits of the buy term and invest a difference are not the same for people with money as they are with people who maybe don't have money. I get the idea that while I don't agree with the buy term and invest a difference sentiment, I do understand that sometimes people just don't have enough liquid cash to be able to save enough money. Unfortunately, we live in this world right now where people are struggling just to get by with inflation right now. People are having a hard time just paying their bills, right? And putting gas in the car, and going to Costco, and going to the grocery store, and making sure food is getting put on the table, and covering your mortgage payments and car payments and all these different things that are going on. Credit card debt is at an all-time high. And so I get that maybe not everybody feels like they can afford a whole life policy, right? I totally understand. Maybe you don't feel like you can save $500 a month or $1,000 a month or $2,000 or whatever the number is, right? Like, I totally get it. However, I also know that most people have an insurance need. And even, I don't like to use that word need because I don't look at life insurance as a need-based product. I look at it as a want product. Like for me, I don't need life insurance. I want life insurance because I want to provide for my wife. I want to provide for my kids. I want to make sure that what I want to happen will happen when I want it to happen, whether I'm here to see it or not. That's what life insurance is all about. And so what I'm looking at here is term insurance fits a role. So when we look at funding of life insurance when we're younger, you can buy term insurance and that will solve a short-term need. But what I'm gonna say here is that when you buy term insurance, make sure that you get convertible term insurance, and don't just get the cheapest of the cheap term because A, that's probably not gonna be with the best company. B, you wanna make sure you lock in your insurability. And when you buy the cheap term insurance, it's not gonna be able to convert to a permanent policy that can lock in your insurability for the rest of your life. And I know a lot of people say, well, I don't need life insurance when I get older because my assets, I'm gonna have no debt. There are still ways that you can leverage, and it gives you flexibility to be able to show up differently in your life with the rest of your money, with your retirement. If you know that you can spend every dollar that you have because you have insurance on the back end to pay it forward to the next generation, it's a really, really powerful position to be in. And so that's a really important component. So understand that term insurance is something that if you have low cash flow, I'm a big believer in doing that. And at the same time, don't rest on your laurels with term insurance and just lean on just kind of banking on that term insurance is going to be the end-all be-all solution for your insurance, because it's not. All right, so now what I want to do is I want to get into the actual life insurance here. So let's talk about, I'm going to talk about the permanent, I'm going to just say permanent life insurance here. So here's the deal. When we look at life insurance and we look at annuities, as I talked about, the fact is, this is better. Life insurance is going to be better as you're going through your accumulation years. Annuities are going to be better in the distribution years of your financial planning journey, your retirement, if you will. So let's take a look here with the life insurance. You're going to be, when you're younger, you want to make sure you're doing this when you're younger because of the fact that, hey, listen, your life insurance is going to be cheaper, the cost of insurance is going to be lower, you're going to have time on your side. We're looking at life insurance as a banking alternative. We're never looking at life insurance as an investment. The people that don't like life insurance as an asset is because of the fact, I believe, at least for most people, they don't understand that life insurance is not an investment, but it is a great asset. We call it the and asset because of the fact that we can leverage it as a banking alternative. And I'm a big believer that we need to be saving money before we invest, and we need to save with the intent of investing. And so when we look at it from that perspective, going out and looking at our banking policies here, we're looking at the fact that we need to save money. We need to build our safe foundation of our financial life, and whole life insurance is the best play to do it because it provides leverage. And so what I'm going to say is that we need to go out and we need to put a certain amount of money inside of a banking policy, and whole life insurance is the only safe, liquid, accessible asset that I know of, and I've looked at like pretty much everything out there, that will beat inflation from a long-term perspective and not give up the liquidity of your money. That is a really, really powerful perspective. And there's a reason all these banks own what's called BOLI, bank-owned life insurance, and they take your money that you put in deposits and they put it into life insurance, and they have that as a tier 1 asset on their books. I've used this statement already in this video. It's a self-completing plan. What I want to happen will happen when I want it to happen, whether I'm here to see it or not. If I'm saving money in a bank account, right? By saving money in a bank account, let's say I'm saving $500 a month. Year 1, I save $6,000. Year 2, I've got $12,000. Year 3, I've got $18,000. And year 4, something tragic happens to me. Well, I die. And now all of a sudden my family just has $18,000 in a bank account, and that's it, right? I've got 3 kids. If I have my money saving in a whole life policy, I probably got about $16,000 instead of $18,000 liquid. So it's really not, you're giving up a little bit. But instead of having just the $18,000, if something tragic happens to me, my family is probably going to get somewhere in the realm of $500,000 to $800,000 of life insurance that goes along with it. Now, with that said, what we're always trying to do, and this is why I love it's a self-completing plan, but what I'm always trying to do is looking at this, we're never optimizing life insurance for the death benefit. We're always optimizing it for the living benefits. And that includes minimum death benefit, maximum cash value. Now, the cash value accumulation is what you're going to be able to leverage and access. It's going to be your banking alternative. Now, you're also going to have living benefits. If you become critically, chronically, or terminally ill, you're going to be able to access that money while you're alive to be able to utilize it and leverage it for alternative medical treatments. I tell the story about my father-in-law with his pancreatic cancer a lot. Like, it's a big deal to be able to access and have control of your medical directive and be able to make decisions around your health based on what is right, not based on having to cower to the insurance companies, the health insurance companies dictates about what you can and can't do based on what the pharmaceutical companies are telling you is right and wrong for your medical directive. I don't know how you kind of feel about that, but to me, that's a massive, massive deal, having control of my own medical directive and being able to really be empowered to make the best medical decisions I can. And so when we look at life insurance, we're looking at this, what I would say is the younger you are, even before you have kids, even before you're married, if you know eventually you're going to go there, we all need to save money, right? We all need to save money in a bank account. My encouragement to you is stop going out and trying to invest. And I know that sounds weird because I'm really big. I believe you should go out and invest, but I think you need to wait to invest until you have the foundation of your financial life built and you have the safe money so you can go out and act like a solid investor. You got to build that foundation up so when the market goes through its cycles, you're prepared to weather the storms and you can act like a solid investor. All right, so on the flip side of this, we look at, okay, you've saved up your money, now you're gonna leverage this money, you're gonna invest with this money, because remember, this isn't just, the purpose of the money inside of your banking system here isn't to just have this money sitting here and being stagnant. The goal is to get this money moving, right? Through real estate, through crypto, through business, through whatever avenue, even if you invest in stocks for yourself. Like, this is just a great way to leverage and create systems that force you to have better investor behavior. That's really all this comes down to. And so that is the life insurance side. That is the role life insurance plays in your personal financial life. Now, life insurance companies, as I started off by saying, have also annuities. Now, when you hit the phase where you're going into retirement, annuities can be a great way to guarantee and optimize your retirement. Now, here's the deal. I'm a big believer. They are not great accumulation vehicles, but when you hit the age of 55 and up, annuities can be a phenomenal, phenomenal product for you. Now, when I say they're not great for accumulation, the last 10 years or so, 10 years out, we'll just say from retirement, when you have 10 years or less, what happens is there's a lot of these fixed indexed annuities, FIA as they call them, and what every company is a little bit different. They're constantly changing, so it's important to understand that. But there are great guaranteed features that are inside of these contracts. And remember, annuities are simply contracts because they're guaranteeing that you're going to have your income in a perfect setup. Now, if you understand the old 4% rule when it comes to investing, you'd have to have $1 million to be able to pull 4% out of that and make sure your money will last for the rest of your life. And that's not even guaranteed. That's just saying, hey, we're gonna have a really high likelihood of not running out of money during our lifetime if we implement the 4% rule. Now, what annuities do is they ensure, they optimize that you're gonna be able to maximize the return. You're shifting your income risk during retirement from you and your retirement account over to the insurance company. They're managing that risk for you. And in return, they're giving you guarantees of income. And this is income insurance, right? Like you have life insurance over here. This is guaranteeing that you have income insurance. People are more scared of running out of money during retirement than they are of dying. That is a fact. And so this annuities are the only way, Tom Hagna says this very, very well. Annuities are the only way to optimize your retirement income and guarantee that you are not going to have to take a step backwards in as far as your retirement. He utilizes a phrase, and he wrote a great book if you haven't read it. It's called Paychecks and Playchecks. We're all used to working, and when we're working, we have a paycheck. And so when you retire, you lose that paycheck. An annuity is a way to create your own personal pension. So you guarantee that that income is going to keep giving you, or that your assets that you've accumulated are going to create this pension for you in this guaranteed paycheck, right? And then that paycheck should be able to handle all of your daily living and weekly, monthly, and yearly living expenses. Now, we also want a paycheck, because what day is every day do we spend the most amount of money in our life? The weekends, right? When you retire, every day becomes a weekend. And so what we want to do is we want to make sure that we have a paycheck. So we utilize an annuity to guarantee our income, because remember, when we hit retirement, it doesn't matter how much money we have. What matters is our cash flow. What matters is that the purchasing power of our money, that we have that quality of life locked in for the rest of our lives. We want to make sure that that's locked in. That's our paycheck. And now on the paycheck side, we can get an annuity as well to guarantee and optimize that the vacations, the time we spend with our grandkids, the time we spend with our family, those things that we want to do, those are our paychecks. We can get an annuity to guarantee that as well. And then once, if you have anything above and beyond annuity, or that amount of money that would be optimized to lock in and insulate and ensure your income for the guarantee of the quality of your life for the rest of your life, if you have any assets above and beyond that, now you can optimize with other speculative investments. Once again, this is all about investor behavior and investor structure. And so when you do that, now you can go out and now you have a really optimized retirement. And when you look at the life cycle of how life insurance companies play a role in your life, they're going to help you accumulate, build a safety foundation. They're going to preserve preserve the purchasing power of your capital in your life as you're saving. They're going to make sure that what you want to happen will happen when you want it to happen, whether you're here to see it or not. And then on the other side of things, when it comes to retirement, they're going to ensure that you are going to have your dignity, you're going to have your quality of life, and they're going to help optimize your retirement income when you get there. So if you have any questions, go ahead and comment in the comment section below. I do my best to engage with every single comment. If you haven't already, make sure you click that subscribe button, hit the bell, that way you get notified every time I launch a new video. Till next time, have a blessed, inspirational day. We'll talk soon. See ya.